Why does your pension have such few index trackers or exchange traded funds when we know that they tend to perform better than actively managed funds, the type of funds that your wealth manager or your IFA puts you into? Well, the reason is they're a direct competitor to the wealth manager or the fund manager in this regard. First of all, they outperform what fund managers are putting you into the actively managed ones. And secondly, they charge more fees, so the wealth manager or the IFA earns more money. So they haven't got any interest whatsoever in telling you, and I'm going to go through which ones did well last year, in telling you what you should be investing in, which might do better, and which has outperformed them, because it'd make them look bad and not earn them money. So if we look at some of the exchange traded funds over the past year which have done rather well, and I'm going to start off with the ones which went up over 100%, but we want to make sure that they had relatively low volatility. We don't want some of the crazy stuff. First of all, here comes diversification. You've got coffee up there. Now you might as well, I don't want coffee, Alpesh, because it's something I don't know anything about and it's a little bit on the risky side. So no thanks on the coffee front. Actually, there are about 7,000 exchange traded funds to go through. And you might not go for the Bitcoin one, but at least you've got those divided by themes like AI or crypto. You've got them divided by geography. So you might go for Europe, Australia, or such like. By style, so growth. Given the massive amounts of choice, why doesn't your wealth manager just say, I will create an ETF, exchange traded fund portfolio for you with low volatility and good returns? The reason is they don't get enough fees. These exchange traded funds charge very little fees because they're passive in the sense that they don't have a fund manager as such managing them. So there isn't enough money to recommend it to you. I give the data on all 7,000 to my clients because I don't have that conflict of interest with them. So everything from gold to defense. Defense was up 57% last year. Fintech up 57% as well. You've got space innovators up over 50%. Industrial innovation up over 50%. There's a lot to choose from. The basic problem is if you haven't got the data, if you haven't got the information, and then once you've got the information, you don't know what you're supposed to look for. That's the basic underlying problem. And that's another thing. Your fund manager and your IFA, wealth manager, will never, ever, ever give you the data or the knowledge. Because if they do that, they'd also be redundant. I make sure my clients have got all of